Welcome back. You're watching Markets at Noon. BHEL out with its numbers. I did see that the profit after tax at one flash is along expected lines. EBITDA has done better than what we were factoring in. 1,232 crore rupees as against 569 crore rupees year on year. But more importantly, it's almost 300 crores more than what we had been expecting. Look at the margins, Pankaj. 12.2%. The street was expecting 8%. All of that being factored now by the BHEL stock that has gone up. It has spiked nearly 5% in trade on the back of those earnings. I'm sure we are dialing experts to decode these numbers for you, and one of our in-house experts from the research team will also be joining in with the first cut analysis of the BHEL numbers. The stock up 4.5%. Pankaj, factors to watch out for. Very importantly will be the order pipeline that will give us an idea of if there are indeed green shoots in the economy.
You know, if I just look at the numbers, Nayantara, on the second take, they're not looking particularly that good. You know, if I just look at the numbers in terms of what's happening. So the PAT number is much lower. The expectation were about 600 crores. But I think, okay, Tarang Bhanushali is now with us. Tarang, EBITDA is strong, but all the other parameters are a miss. What do you make of the numbers on first take?
Well, on the revenue front, yes, it is lower than what we were estimating, but margins are again a big surprise for us. On the margin front, we were estimating somewhere close to 9%, so this is a very positive surprise for us. We have to wait whether it includes some one-off or not. So.
Of course, you know, Q4 always tends to be, you know, some sort of one-off here and there. But assuming that it's a good 12% margin, do you think that this will be sustainable? Or again, you know, numbers have been very volatile in the last few quarters, especially the margin. So you would take it still with a pinch of salt?
See, normally in Q4 we see this bump up in margin, but I think for the full years, I don't think they can be able to maintain this margin. It would come down from here.
Why do you feel that the margins will come down, Tarang? What's the rationale behind it? Because maybe one of the big reasons you're seeing the kind of movement you're seeing on the stock is on the back of a 12% plus margin.
See, if you look at the revenues, then revenues on a sequential basis have jumped almost 30-40%, and Q4 is the strongest quarter for this company. So normally you will see this bump up in margins for most of the cap goods or infra players in Q4. But on a normalized basis, we will see weaker margins in Q1 and Q2.
Hang in there with us, Tarang. I'm now going to invite Rabindranath Nayak from Sunidhi Securities joining us. Rabindra, what is your first cut analysis? I think the street is enthused by the EBITDA and the margins, which have beaten street expectations, and how. However, we cannot say that for the revenues and profit after tax, pretty much along expected lines. What's your first cut analysis? And do you think this kind of performance, particularly with the margins, is sustainable?
Doubtful. Margin is 12.1% margin is not sustainable this point of time when the majority, around 70% of the business is still coming from the power equipments. So I think the margin is not sustainable at this level.
Rabindranath, what's your call on BHEL? I mean, you know, the stock can do what it wants to, but numbers are still not showing any signs of recovery?
Marginal recovery would be there. It is not the significant recovery from here on is very doubtful. So it is for this, I can say it is a hold recommendation still continue.
You know, if we just look at the numbers, you know, back then earlier BHEL revenues used to be 19.5, 20, 21%. Now that time L&T used to be about 8-9%. L&T has gone to 13. BHEL has, you know, come down to 12%. What do you make of this? You think this outperformance of L&T versus BHEL will continue?
Yes, that will continue. L&T will continue to outperform BHEL in terms of profitability and revenue also.
Okay, I'd like to thank both of you gentlemen for joining us here. I think, Pankaj, the analysis seems to be that this kind of performance is not sustainable, that we should look at a 12% plus margin as an aberration and keep that in mind for all the stock calls.